Good day to you. This is Owen McCafferty again, presenting some comments and thoughts thanks to the kindness of Professional Fusion. And today we're going to talk about cash. We've hit a lot of different component parts. We've talked about inventory, furniture and fixtures and equipment, real estate. But let's just talk about cash. Cash over the next 6 months. Now, let's say well into the first part of 2025. And these comments could even have applicability beyond that point, but I do see cash and cash management is going to be somewhat of an issue over the next 6 months, and then possibly beyond. We don't know how long this recessionary challenge is going to be with us, but as long as it is, there's going to be issues with cash. First thing, cash is liquidity. If I have cash, I have power. It doesn't matter how much income I generate. It doesn't matter what the earnings before interest, taxes, depreciation, and amortization are. If I don't have enough cash to pay my bills, I'm in trouble. So I can buy capital assets, I can make distributions, I can pay down on debt. All of those things will consume cash. They are a consumption of the cash issues that generate in practice. I can go out and borrow money, so that's a source of cash, but that means I have to have good credit, and most probably I better have a prior arrangement with the bank. Because remember, banks don't like to loan you money when you need it. Banks are in love with the idea of loaning money to you when you don't need it. So cash management, especially during a recessionary period, becomes crucial. I guess you'd say that you need to have a discussion with your banker, give your banker all the prior financial statements and tax returns, and ask them, what does it take for you to secure a line of credit of an adequate amount that would at least cover 2 months operations without sources of capital? I know that sounds a little conservative, but when you need cash, that's when nobody really wants to loan it to you. So you have to make provision where there is a prior commitment on the part of those that have cash that they will be automatically placing money in your account so that you have the adequacy to meet your financial needs. Other sources of cash. Receivables are an excellent source of cash. Collecting on your receivables. In a lot of professional entities, they are able to collect cash upfront from their patient or client, or they have the availability of third-party payment where the third-party payer pays the cash. Unfortunately, third-party payers in recessionary times become deadbeats. They like to stretch out that time that they pay the obligations. They live to collect premiums from their insureds, but they hate to pay proceeds. So for that reason, you really got to watch the cash management of your receivables during a recessionary time. What are some ways that you can watch the recessionary time and the cash management? Well, one way is to generate an income stream and expect to get paid. When you perform services that you know that the client doesn't want, but in the weakness of the moment says okay, only after the fact becoming resentful that you perform those services, you're going to have some cash collection issues. That relates to veterinary medicine when you truly do have a client and the patient is that which the client is bringing in. For dentistry and for dermatology, you're dealing directly with the patient or the patient and third-party reimbursement. Third-party reimbursement is kind of like that client with veterinary medicine that just doesn't want to pay. Sure, they like to take the premiums, but gosh darn it, making payment of proceeds, that requires just a little bit more thought and effort. So for that reason, In dealing with patients, make sure that you have an excellent relationship with the insurance company and that you know exactly what the insurance company will reimburse. That's why specialists in practice dealing with specific insurance groups and having prior approval go a long way. In veterinary medicine, there are insurance companies. They're less than 3% of the market. So it's not as much of an issue. Cash management also assumes issues of theft. We've already talked about theft and defalcation, but just remember that when people need money, they have motivation, opportunity, and justification. And in all of those, they have a reason for taking cash from you. So this is Owen McCafferty. Don't want to belabor the point, but here's the takeaways. Number one, negotiate now with a bank for some sort of line of credit or financing. Number two, make sure that you watch your theft and possible defalcation. And number three, look at your receivables. Control the fee income earned on your practice management system with the cash being collected. And then reconcile that, sending out timely statements to either patients or clients of amounts owing. So with that in mind, again, this is Owen McCafferty. Thank you so much for listening. Hope to talk to you in a bit. Bye-bye.